Yeah. As a loan officer, I get such a bad rap sometimes. I have two sides of the spectrum, people on two sides of the spectrum. There's people who complain that when they go out and qualify for a mortgage, for some reason they don't qualify. They blame the loan officer for being lazy, for not going out of their way to make it happen, and they're horrible people. And then we have the other people who says that it's so easy to get a mortgage. Loan officers are the reason why there's a downfall of our economy. Well, you can't win. Well, here's the secret. Loan officers, we don't decide the guidelines. We only play in the guidelines. What's going on, guys? My name is Min Win with What's a Mortgage, and tonight we are going to go over how income is used to qualify for a mortgage. If it's your first time tuning in, do me a huge favor. Oh my God, I'm going to blame it. Do me a huge favor, please. Do me a huge favor. If this video, my goodness, I'm going right now. Sorry, tongue twisted. Rewind. Hold on here, guys. Sorry about the rewind. So, as a loan officer, we get such a bad. As a loan officer, I get such a bad rap. We have two people on two sides of the spectrum. There's people who complain that loan officers don't go out of their way to help people qualify for home ownership. They're lazy. They're not making an effort to help qualify somebody. And they get upset. And then the other spectrum, there's people who complain how it's so easy to qualify for a mortgage that loan officers are the downfall of our economy, causes the downfall of our economy. Well, guess what? It's not our fault. We don't make the rules. We just live in the rules. And tonight, guys, we're going to go over how income is used to qualify for home ownership. If it's your first time tuning in, guys, do me a huge favor. Save this video, like this video, and share this video. All right, guys. Also, if you have any questions, oh my God, I'm going like doing bad today, dude. Sorry about this, guys. We're trying to preset this up for a video. Slow down. All right, slow down. Okay. Sorry about this, guys. So tonight, guys, we're going to go over how income is used to qualify for a mortgage. Right? So there's two factors to play into using your income to qualify for a mortgage. Number one, whose income can you use? Right? I see this is a big hurdle most people run into. People count on other people to help them with the mortgage payment, but they can't go on the loan. If they can't go on the loan, you can't use their income to help you qualify. Right? It happens a lot. You're counting someone's income. You get upset why you don't qualify for what you want to qualify for because the other person can't go on the loan. And the second part, once you figure out who can go on the loan, how to calculate that income, even though you can afford the payment. When the bank looks at your history of how you make your money, they don't see the consistency to give you a specific income amount. And then they cut your income and you might not be happy because you don't qualify for what you want. Okay, so those are the two factors that play a huge part in qualifying for a home. These two factors, like I said, the loan officers do not control the guidelines that are created, right? Fannie Mae, Freddie Mac, and Ginnie Mae, they create the guidelines. Loan officers, we live inside the guidelines, all right? So let's go over whose income can you use. So it happens a lot. People reach out to me. They get so upset with me. Oh my gosh, man, you don't know what you're doing. Loan officers, if you're watching this, you get that complaint too. Oh my gosh, I make way more than this. I can make this payment with my eyes closed. But a lot of times, people who are going to help with the mortgage payment can't go on the loan. You add your brother or a friend who's going to be helping you with the mortgage payment, but they can't go on the loan, right? So you can only use the income of the people who are going to go on the loan. Remember that. Also, they must pass the citizenship test. They must be a United States citizen, a permanent residence here on a visa or DACA, Deferred Action of Childhood Arrival, right? Once they pass the citizenship test, next, they got to pass the credit test, right? You must have the right credit to go on the mortgage. If you're going to go with a government loan, you need at least a 580 credit score. I know you can go under 580 for a government loan, but nowadays with these manual underwrites and it's a seller's market, not a lot of sellers are going to accept manual underwrites. You want to go with an automated underwrite. So you need at least a 580 credit score with a government loan. With a conventional loan, you need to have at least a 620 credit score to go on the mortgage. And on jumbo, you want to have a 680 score, right? 620 conventional, 680 jumbo. So once you pass the identity, the test, the residency test, right? You pass the credit test, right? And remember, on government loans, right, must you include your spouse's debt. And that happens a lot. A lot of times when people qualify for a mortgage, they can't add their spouse because their spouse either has bad credit or too much debt, and you're not trying to include them. But when you tell a loan officer what you qualify for, you also tell the loan officer the income of your spouse. But your spouse can't go on the loan. But remember, you got to add the spouse's debt on a government loan. So you go in USDA, VA, or FHA, you got to add the spouse's debt, even though they're not going to go on the loan. And that right there could knock you out from qualifying. And with a VA loan, remember, if for some reason you can't add your spouse and you got to add their debt, you cannot add a cosigner. Because on veteran loans, only cosigner you can have is your spouse, unless you can add another veteran if they meet the VA loan requirements. That's the only time you can add a cosigner, another person onto a VA loan. So remember these rules before you start budgeting a mortgage payment, before you start falling in love with the house. You got to understand whose income can go on the loan. If you don't understand the income whose income go on loan, you're sitting there and you're budgeting for something and you get all excited because, I can afford that payment. That payment's easy. But if they can't go on the loan, then you can't afford the payment. Okay? You can afford it, but they can't budget for that payment or help you qualify. So cut your loan officer some slack here. Now you know the people who can go on the loan. The next step is what income can you use, right? There's income you can use, and then there's income you cannot use. Let's talk about the income you cannot use when you're qualifying for a mortgage. Let's say they meet the residential requirements. They meet the credit requirements, right? And now they got to meet the income. Remember, you can only use income. I keep beating this in. The reason why it happens so often. Oh my God, you understand how it happens at least like 4 or 5 times every week, right? Someone who's not going to go on the loan, you can't use their income. Now you want to use their income. They got to have a 2-year work history, a current 2-year work history. If they don't have a 2-year current work history, you cannot use their income on the loan. The only exception is they graduate from school. And the school history makes up the work history. The transcripts makes up the work history, right? Let's say you went to nursing school or truck driving school, right? Technically, if you go to these little special technical schools, that makes up the work history, right? Or you graduate from college, it makes up the work history. The only time when it's under 2 years is if you were in school and your transcripts makes up the history. So remember that. Only 2 years, they have to be in the workforce for 2 years or finish school. Also, temporary disability. You cannot use temporary disability unless you are planning to go back to work at the same company. For example, you're on maternity leave. But if you're going to do something like that, make sure you talk to your lender first. You want a letter from your employer saying that this is temporary disability. You will be going back to work, and you will be keeping the same position, and you will be making the same amount of money or more, okay? Make sure you have that, because if you don't have that, you cannot use the disability. And every lender is different, so make sure you talk to your lender up front. Some lenders will be cool with temporary disability as long as, like I said, you're going back to the same job, right? Maternity leave, but some lenders might not. So it all depends. Talk to your lender, okay? Unemployment. I know because of pandemic, people are making way more money on EDD or making the same amount of money. You cannot use unemployment income, okay? You cannot use unemployment income to help you qualify, right? It's not guaranteed, right? There's a timeline on it where it ends, so you can't use unemployment. Also, you cannot use the GI Bill. If you have income questions, as soon as I'm done with this, I will answer all your questions. All right, Michael? All right, Rosalinda? So, GI Bill. Yes, you served our country. You did great things for us, but they cannot use the GI Bill income, okay? So remember that if you are a veteran, you can use permanent disability. You can't use temporary disability, right? Permanent disability, right? You can use your Social Security, but you cannot use the GI Bill or temporary disability. Last but not least, you cannot use undocumented income, okay? If you have undocumented income, you might want to look at a non-qualified mortgage, which requires a bigger down payment. A lot of times they require that you are self-employed, okay? So if you have undocumented income, that means income that you did not file with the IRS, right? If you write off everything, you did file with the IRS, but you wrote off everything. You cannot use that. There's no income to use. if you get paid cash under the table somehow, or whatever income you get paid, if you don't file it with the IRS, it's undocumented. So you cannot use that income. I had a guy and his wife get so mad at me. They even wrote a disgusting comment, right, on our page. If you go to our page, you can find who wrote it, right? They were so upset with me because they can afford X amount, but they can't qualify for X amount, because the only reason why they can afford X amount is because his mother was going to help him with the payment. His payment, I think, was like $1,800 or $2,300, $1,800. I think she was going to pay $1,000, but because we can't use her income, they don't qualify. He was so upset. He said we didn't go out of our way to help him qualify, but it's like, I can't use income. But in his mind, he has good credit. He's convinced, I can make this payment. Everyone else is loaning me money for credit. Why won't you loan me money for a house? Right? Man, we went above and beyond. We can't get this guy qualified, right? Also, if you are a wage earner and you did not file with the IRS, guess what? That is not undocumented, because your employer has filed with the IRS. So if you are a wage earner and you did not file your tax returns, you can still buy a house. If you owe the IRS money, though, you'll see it in your credit report, right? That as long as you're making monthly payments, you can still qualify. Okay, so that right there is the undocumented income you cannot use when you want to buy a house. So if you have any type of that income, you might want to think twice. Hey, I might want to look for a cosigner right now, right? I don't recommend it unless you can make the payment, but for some reason, because of the undocumented income or the non-qualified income, you might have to add that cosigner, okay? Now let's talk about the 4 types of income you can use to qualify to buy a home. Guys, do me a favor. If this information is valuable, save this video, share this video, and like this video. If you're not subscribing, hit that subscribe button, all right? So, the 4 types of qualified income. Number 1, fixed income, right? It can be taxable or non-taxable. That means it's fixed every month. There could be little increments, but it's typically fixed, right? So, if it can be taxable or non-taxable, like your retirement income, 401k, your pension, annuity, if it's government ordered or court ordered, Social Security, child support, alimony, permanent disability, or if you want a lawsuit and you're receiving money every month, right? You can use that income. But remember, you must prove that you're going to get the income for at least 3 years or more. So if you're getting child support and your kid is 15, they cannot use that income unless there's a document that says that you will keep getting child support after the child turns 18 because they go to college, right? If you're not going to get it past 18, you cannot use the income. Typically, with court order, document order, you're going to get an award letter. Also, the lender's going to check your bank statements, right? Unless it's Social Security, a lot of people who have Social Security might not have a bank statement. They might get a check and they might cash it, right? They're going to ask for the check stubs, okay? So, award letter, a bank statement for proof receiving the money in the last 2 months. It's important that you know that, because it happens a lot, especially with court-ordered documents, right? Court-ordered fixed income. So if the document says you're receiving $4,000 a month and you receive $4,000 a month, they're going to check your bank statements, you're fine. But if you're receiving but the letter says you're going to receive $4,000 a month, but you're only receiving $3,000 a month, guess what? They're going to only let you use $3,000 a month for income. Okay? Also, if you're receiving $4,000 a month, but someone is giving you $10,000 a month, you can only use the $4,000. They're only going to let you use worst case scenario. Okay? So that's fixed income. The second type of qualified income, rental income, right? Here we go on rental income. If you went out and you bought a property to rent, you can use rental income, okay, to help you qualify for that payment of that rental property. If you own a home and you're going to be vacating that to buy a new home, owner occupied, the home you're vacating, you can use rental income to help you qualify. It is rare someone will qualify with their current mortgage and their new mortgage. So the lenders will let you use vacating rent. You can use existing rental income. This is the income that shows up on your tax returns. Rental properties that you've owned before. Remember, it has to show up on your tax returns. I see a lot of people writing off everything. If you write off everything, guess what? There's no rental income. Make sure that there's income on there, and they're going to see by your tax return. Another one, border rent, aka rooms for rent. You cannot buy a home and say you're going to rent out these 2 rooms and have that rent help you qualify. But if you have a property that you own, owner occupied, and you rent out rooms and you claim it on your tax returns for 2 years, you can use that rental income when you're buying another property or you're refinancing your current property. You must have proof. Airbnb, which is a hot thing right now. That Airbnb income must be on your tax returns. So you're buying a property and you say it's Airbnb. Typically with Airbnbs, there's a higher rental amount. You can't use that dollar amount yet until you see it on your tax returns. But you can use the market rent, what it currently rents out monthly, right? There's a big difference between monthly rental and Airbnb. Everyone tries to go with the Airbnb because it's a higher dollar amount. But unless it's been on your tax returns, you can't use that Airbnb income. Okay, so that's the second type of income you can use to qualify. The third type, self-employed. For those of you who are entrepreneurs, sole proprietorship, LLC, corporation, right? That's self-employed. Remember this, that company that you own has to be valid, has to be in business for 2 years. So let's say you have a company. Once you file tax returns for 2 years, you can use that income. But let's say you open a dry cleaner and you shut it down after a year, you open another dry cleaner with a different name. That's not a 2-year history. That company, that business has to be in business for 2 years and they will go off your tax returns. Okay? So you got to have it for 2 years if you want to use that income for self-employed. Okay? And of course, the fourth most popular income people use to qualify for a mortgage, wage earner, W-2, you work for the man, right? Salary, hourly, bonus overtime, commission, right? Part-time, seasonal, second job. If you get paid and there's something deducted from your paycheck, right? Your Social Security, right? Your state tax, federal tax. Some of you guys who file exempt, at least state tax is still taken out. You are a wage earner. It's the most popular income, and you can use that income, okay? So now you know, first, who's going to go on the loan. So before you blame a loan officer for not qualifying you to buy a home, or before you blame a loan officer for the crash of the industry, understand that first, the lender's got to know who's going to go on the loan. They can only qualify people who can go on the loan. So just know that if you're not qualified, it's not because you don't qualify, because people who are going to help you with the payment cannot go on the loan. Before you say the market's going to crash, just know that lenders, they are only going to use the income for people who are going to go on the loan, because those are people who are obligated to pay back that debt. So remember that before you blame loan officers, okay? So it's important. Who's going to go on the loan? What income can they use, right? There's qualified and non-qualified. We talked about the non-qualified income. And then the qualified income, right? Fixed income, rental income, self-employed income, and W-2 income. So we need to understand that before we start budgeting for a mortgage payment. Before you start spewing out numbers, to understand those 2 things, okay? Is who and what type of income. Guys, again, if this video brings you any value, save this video, share this video, and like this video. And don't forget to subscribe, okay? So now you know the type of income. Think about this. If you are loaning out, imagine this, think about this really quick. If you are out there loaning out money to somebody and there's a payment that you are demanding that that person pays you back each month until they pay off the loan, you want to know how are they going to pay it back, right? Of course, let's say they have the history of borrowing money, but you want to know how much money are you making, right? So today we're going to talk about how to calculate income, how income is calculated to qualify for a mortgage, right? So before they bank loans you all this money, they know, okay, if you want to borrow X amount of dollars over 30 years, 25 years, 20 years, 15 years, they do a math, they see the payment. Okay, this person needs to make X amount. And how do they know? They'll calculate your income, right? So it's how they calculate your income. So they calculate your income different ways. And we're going to go over tonight on how they're going to calculate your income, right? How income is calculated. Remember, there's income called as-is income. So whatever your income states as is, they will give you that income to qualify for a home. Also, there's gross up income. Some incomes, they'll allow you to gross it up. Gross down income. Some incomes you're receiving, but they're going to gross it down. Some income they're going to average over 12 months. Some income they're going to average over 24 months. some income because you just got the job. They're going to give you a year to date. You have a history of working, but you're at a new job, right? They're going to give you the year to date, maybe because you don't have a 12-month history or a 24-month history. Also, worst case scenario. Let's say your income is declining so much. They're going to go off a worst case scenario, which means they're going to take the worst year and divide it by 12, right? They're going to go off the worst case, or they'll cut your overtime and bonus and just let you use your base income, worst case, okay? So let's get into fixed income, right? The 4 types of income: fixed income, rental income, self-employed income, and W-2 income. So fixed income, there's 2 types of fixed income. There is taxable income, and there's non-taxable income. If it's taxable income, it can be court ordered, government ordered, right? The bank's gonna send you a reward letter, right? Court order document, retirement, right? Whatever your distribution on your retirement, right? Or on your tax return, they're gonna give you as is income on taxable fixed income. If your income is fixed and it's taxable, whatever the document says, whatever is proof on your bank statement, whatever proofs on your tax return, they're gonna give you as is, okay? So if it's taxable, it's as is. If it's non-taxable, they allow you to gross up the income. Remember, you have to prove that you're going to get it for 3 more years. But if you can prove it, that you have it, and you're consistently getting the dollar amount, right? And you're going to get it for 3 more years, they'll allow you to gross it up on non-taxable income. They will gross up between 15 to 25%, depending on the program. For example, if you go with a conventional loan, and you're receiving $2,500 a month as your fixed non-taxable income, they're going to gross it up to $2,875 on your loan application for you to qualify. You're going with a government loan, USDA, VA, FHA. They're going to gross it up 25%. So on $2,500, you're going to get $3,125 to qualify. That's what they're going to put on your application. Some of you guys, you might look at your application, whoa, I don't make that. Remember, they're going to be able to gross it up. So if it's fixed income, it's taxable, as is. Non-taxable, they're going to gross it up, okay? So that's how the banks calculate fixed income. If you have fixed income questions, please message us, right? info@whatsamortgage.com, right? If you like, hey, I don't know if I can use this income, it's fixed, message us, right? info@whatsamortgage.com, or give us a call or text us, 714-790-9697, okay? So now that we talked about fixed income, let's talk about rental income. There was a big buzz about it today, all right? On fixed income, Andy, can you go to our Discord and our links? I put that Fannie Mae link in there. If you can put that on the bottom, if you can put that in the comments. So guys, if you want to know this guideline, I'm going to post it in the comments for you on Facebook. Also, guys, it's on my Instagram. Guys, if you're not following me on Instagram, right, go to my Instagram. Follow us, right? There is a video that I released, and I put the link on there for rental income, okay?
The link's too long for YouTube.
Okay, the link's too long for YouTube. So it's going on Facebook, and it's going to go on our Instagram, all right? We'll probably put it in our pre-recorded video. We're going to turn this into a pre-recorded video, and it'll be there on YouTube, okay? So rental income. Let's get back to rental income, right? Remember, there's new rentals and vacating rent, right? So if you're buying your first rental property, you can use 75% of the gross rent, okay? If you are vacating a property, you can use 75% of the gross rent. So if you're receiving $4,000 a month, or you will be receiving $4,000 a month, you can use $3,000 a month to help you qualify, 75%. But if you own a house, you're buying a house owner occupied, you cannot use rental income unless you're doing a 2-unit, a 3-unit, or a 4-unit, right? You can't use that border rent. Like I said, you have to show it on your tax returns. So if you are buying a home and using rental property, right, rental income, new properties, you can use 75% of the gross rent. You're going to gross it down. Same thing with vacating, right, 75%. But if you have a rental property already, it is existing rental, they're going to take the average, right? Remember, the lenders are going to look at your tax returns. So if you write off everything, you have no income, right? So when you look at your tax return, it's not the amount you receive, it's your net rent income. And they're going to average it out over 1 year or 2 years, depending on how long you've had your rental property for, right? They're going to look at your Schedule E. And in some cases, let's say you claim a negative, right? All of us, you can talk to some lenders, they'll use the 75% of the fair market rent. Like it says the same rule, right? Let's say you collect $4,000, they'll let you use $3,000. They'll look up the fair market rent. It all depends on the lender you use, right? Some lenders, they find a way to finagle it. The way they talk to the underwriter, hey, this person, for some reason, now they're renting out to a new tenant and they're collecting more in rent. So let me use a 75% market rent, not the rent on my tax return, on their tax returns, right? So when you do have rentals, you want to let your lender know right away. You want to have your Schedule E ready, and you want to know what the fair market rent is, because there's different things lenders can use to help you qualify. All right. So of course, that right there is rental income, how they use to qualify you. The third one is self-employed income. Okay. So if you're self-employed, typically, like I said, if you're self-employed, they want a 2-year history. So the 2-year history, they're going to do a 2-year average. That applies to jumbo loans, FHA, government loans, right? Jumbo loans, government loans, and conventional loans. Remember that, okay? Remember that they want a 2-year history. So there's a 2-year average. So you're going to look on your tax returns, right? They're going to see what your net income is. They're going to add back depreciation. If you file a sole proprietorship, they're going to add back business miles, right? And they're going to qualify you. There's one time there is a work through, right? There is a workaround, the 1-year average workaround, the loophole. If you are going with conventional, so not on government loans, not on jumbo loans, right? You could use a 1-year tax returns for conventional loans if you're putting 5 to 10% down and you have above a 700 credit score. But remember, right, this is not a work history. This is just the way you file your tax returns. You can go 1-year tax returns, but the company has to be around for at least 5 years or more, or you have to be self-employed 5 years or longer. So if you're that person that shuts down your business every year to change names because you have a different idea, but you've been self-employed, they'll go off of 1-year tax returns if your CPA is willing to write a letter that says that you have been self-employed for over 5 years, right? That is the only workaround I know for 1 year. But if you are self-employed and you write off everything, you don't show a cent and you're negative, guess what? If you didn't pay Uncle Sam, now you got to pay a higher interest rate. You can get something, a non-qualified mortgage, right? If you're buying a rental property, if it rents positive, as long as the down payment is big enough, they'll let you use that, right? If you don't file any income, right? Or they'll go off of asset depletion, or they'll go off of 24-month bank statements. So if you're self-employed and you don't show any income, you might have to go with a non-qualified mortgage, right? So that's how self-employed income is calculated for you to qualify to buy. Now, last but not least, like I said, our favorite, our most popular, W-2 income, wage earner income, okay? So wage earner, if you're a W-2 and you're hourly or salary, there's different types of W-2, right? Let's go off of hourly or salary first. They're going to give you as is. So if you make X amount, they're not going to average it out for 2 years. Let's say you make X amount and all of a sudden you get a pay increase. After 30 days, you can use the higher base to qualify, right? You can be, let's say you're at $25 an hour for like 10 years. All of a sudden, you're at $30 an hour, right? After 30 days, they'll let you use that 30. It's as is income. Same thing. If you have a 2-year work history, but you change jobs, same line of work or same industry, right? Or same position, and you take a new job, after 30 days, you can use the new pay, right? It's as is income. So after 30 days, you can use the new base pay, right? Remember that, the base pay, not overtime or bonus, that's different. The base pay income. Now let's talk about overtime or bonus. Let's say you did change jobs. As long as you have a 2-year history of overtime or bonus, they'll let you use a new one, but they're going to go off the year to date maybe 12-month average. But if you've been there for over 2 years, a 24-month average of overtime and bonus. If you work part-time, it's okay. You can still buy a home with part-time. Depends how much you make part-time, but they're going to do a 2-year average, right? That's when they don't give you as is. If it deviates from the 40 hours a week from your part-time, you can't, well, this week I work 40 hours. No. When they send a letter to your employer, a VOE to fill out, and it says part-time, even though you work the 40 hours, they're going to average out the income. If you work seasonal, right? Seasonal, you need a 2-year average as well. If you are commission, you for sure need a 2-year average, right? They're going to average it out everything. They're going to, if it's a job change, but you were commissioned before, they can take a 12-month average, right? If you've been there for 24 months, 24-month average. Let's say you just took a job and you're a commission. If, let's say you were selling cars, you've been selling cars for 10 years, you took a new job, right? You've been there 3-4 months, and all of a sudden, they're going to average that out. Let's say, oh, well, it takes a while to turn your pipe as being a car salesman or any sales job. If you buy a home too quick, they're going to take the year to date. Your old job might show all this income, but your new job, they'll still let you use the commission, but they're going to take a year to date. So you want to be deeper into the year unless you can get your pipe to turn fast enough. All right. So that right there is how lenders look at wage earner. For salary and hourly, they're going to give you as is. Okay. If you're using overtime, bonus, part-time, seasonal, or commission, they're going to either take a 12-month average, a 24-month average, mostly 24 months, especially when it comes to seasonal, part-time, and commission, right? Overtime, right? Overtime or bonus if you've been there for a long time. Okay. Rarely will I see a year to date on seasonal or part-time or commission. Normally they'll want a 12-month average, right? Even though it's possible, but depending on the lender, depending on how they paint that story. All right. So, but I do get asked a lot. Common W-2 dilemmas people run into, right? Salary and hourly commission. I see a lot of people, they have these high-paying hourly or salary jobs. They take a pay cut to make more on commission, right? Now their salary got cut, but they make more commission. They're even at the same company. But if the commission is over 25% of your income, they're going to want you to wait at least 2 years. Happens to a lot of people. So common. Let's say you were working at a car dealership as a mechanic, and now you're doing sales, right? You took a lower base pay cut, but you're making more commission. If that commission is over 25%, they're going to want you to wait 2 years, right? Overtime or bonus, that's less than 2 years. I see people, they work at a job and they take this new job, and their new job has a ridiculous base and they're working overtime, right? They've been doing it for like a year and 8 months. Guess what? They want to see a 2-year history of overtime, right? Before they give that to you. Another one that happens, especially right now during pandemic, gap in employment. If you are a wage earner, you cannot have more than a 6-month gap of employment, right? If you do, they're going to want you to be at your job for at least 1 year with that gap of employment, right? Unless it's pandemic, unless you were sick somehow where you can't work and you have proof of it, right, to your lender, they're going to want 1 year. If not, if it's more than 6 months, they'll let you buy after 30 days as long as it's hourly or base, but because of pandemic or because you were sick, right? There has to be something crazy to not make you wait 12 months, all right? Seasonal. You got to wait a 2 years. You can't get around 2 years on seasonal. Second job, all of a sudden you want to buy a house. You start working at DoorDash or Postmates or Uber. If you haven't had both jobs for 2 years without a gap, you cannot use that income. Okay? See it happen all the time. Oh, I've been here for a while now. I can't. You need 2-year history, and there's no gap. So if you have the second job, let's say you're a security guard, part-time, right, as your second job, but you quit or they laid you off and you have a 1-month gap to get to your other job, guess what? You won't be able to use that income until you have a 2-year history without a gap, right? Another one, for my nurses and people who work for the union, right? You are salary and hourly, and all of a sudden they change you to per diem or stipend, right? If they change, even though the dollar amount might be identical when you were hourly or salary, they want you to wait 2 years, all right? Those right there are the most common W-2 dilemmas that pop up. Now you have the keys to the kingdom. Now you know how the lenders are going to view your income when they're calculating what income they're going to use to qualify you. Qualified income, I say, is one of the main pitfalls, not the only, but a main pitfall that cause people not to get approved or fall out of escrow. If you know how to review your income, also how to talk to your lender about your income, you're going to set yourself up for success, okay? So that right there is how the lenders calculate your income to qualify to buy a home. Guys, if this brought you value, do me a huge favor again. Save this video, share this video, and like it. And by now, if you're not following us, do me a huge favor, okay? Hit that subscriber notification button so you're notified every time we go live or post new content. All right, guys? So thank you so much for watching. If you do have mortgage questions, bring them on. All right. Dude, that first part was... Will you be able to edit that up, or are you going to have to do it again?
No, I edit it up.
Okay. Rosalinda, what about being disability? Yes, if you are on permanent disability, Rosalinda, you can use that income. Michael Satini, what about temporary VA disability? No, it has to be permanent disability. All right, hopefully that helps you out. Alicia, for income, they go by gross income. Correct. They go by your gross income. And for credit cards and judge on over credit utilization. I have 70% utilization, but one of my cards is at 15%. How will they judge it? They will judge your overall utilization, but they go card by card. If it was me, I would get your 70% down. One of your cards that's 15% is probably keeping your credit up, but the ones that are keeping it above in that 70, you might want to drive it down. If you qualify already, leave it alone. But if you're not at the credit score that you're happy with, if you get that utilization under 50%, it will improve. But you get that thing under 30, it will get a lot better. Okay, hopefully that helps you out there. So gross income, and you want to keep your utilization under 30. Gary, I have been driving it for Uber Eats for 2 years. Can I qualify? Yes, you can. Garage built. Garage built. You've been driving Uber 2 years? Yes. You can use that income to qualify. Hi, Dad. How you doing? Israel, what if you are an intern with a company that will have a position with you when you graduate? Yes. As long as you graduate, you can use that income. Any future income a thing, or should you just wait till you graduate? If you get paid by them, I would wait till I graduate. You use that history, but you can use the income right away. Hopefully that helps you out. Jolene, can you use income from people that rent rooms to refi? If that room, the rooms that are for rent, as long as it's on your tax returns, you have a 2-year history of border rent, you can use that income. If you don't, you cannot. What up, Duck? How you doing? Thank you so much. Alicia, you guys have a Discord. Alicia, that's an Andy question.
Discord.
We have a private Discord for our team, but you can go ahead and message us, Alicia. Maybe we should start a Discord,
We don't have enough manpower to manage
that. I know you don't like to predict rates anymore because they're very unpredictable. But do you feel rates will drop in the lower 2s by mid next year? I don't like to predict, Rick. I thought rates were supposed to be down like in September, right? But the economy... we can't even handle our debt crisis right now, right? Our economy is supposed to go to crap, right? Where rates are supposed to drop. But for some reason, because the feds are going to start tapering next year, right? The market's already reacted to it, and they're raising rates right now. So I was wrong. But I think rates are going to be, yes, in the mid 2s. I think so. I could be wrong. Like I said, I've been wrong a lot, but I'm standing by right now. Our economy, we do not have money. We printed way too much money. And if you lift up the veil right now or lift up the hood, United States, we ain't looking good right now. So I think rates will have to drop or stay lower, right? That's what I think. Hopefully that helps you out, Rick. Quinton, wage earner info, very good stuff. Thank you. I work union construction and work with different companies at the same paying position. Good to know. Only 30 days. Yes. But Quinton, remember, they're going to collect all your pay stubs. If you work for a union, right? They're going to collect all your pay stubs. Make sure your income is always inclining, not declining. If it declines over 20%, Quinton, they will take the average, okay? Make sure it's either stable or inclining. Hopefully that helps you out. Michael, if I have 20% down for a $950 purchase, is a VA loan better than conventional loan? I already have the disability waive. Go VA. Why, Michael? If you go VA, you're going to get the lower interest rate. Government loans, FHA, VA, USDA, you're going to get the lower rate. On that $950, you go 20% down, right? On a conventional right now, you're going to get still above 3%. Close to high 2s, a 3% for sure, right? High 2s, low 3s, right? If you go VA and you have the disability waive, you're going to get a 2.5 or 2.625. Go VA, okay? Alfredo Hernandez, can you explain one more time how the Airbnb income works? Okay, Alfredo, if you buy a property and you want to say that so typically when people have an Airbnb, they make way more money than your standard market rent. But you cannot use Airbnb income because you haven't had the property for 2 years. Once you've had it for 2 years and you claim on your tax returns, you can use that income to help you qualify for another property, right? But if you're buying that property, you're trying to use rental income for that specific property. Let's say it's in Big Bear, right? You can't use the Airbnb, what it would rent out on Airbnb. You would have to use the standard market rent. Like it was rented out for like a year, 2 years with a lower discount monthly rent, right? Hopefully that helps you out. Can I buy you a beer at Disneyland for helping me close? Rick G, hit me up. I am going next Friday, right? No, next Friday, I will be at Disneyland. You know, if I get you bad information, you're not happy with me, I will not be at Disneyland. But if you are looking for me to buy me a beer, next Friday, I will be at Disneyland. I will also be at Oogie Boogie in October too. All right. So Rick G, message me. Guys, if you need help, you have questions. Today I spent probably 30 minutes on the phone with 2-3 different people. They went somewhere else to do a loan. Remember this, guys. I'm trying my best to help everybody. But if you need help and you're patient, I will help you. Okay. Even if you're going to use my services or my team services or my partner services or not. We had, like I said, 2-3 people who reached out to me. I'm here to help you, right? Give us a call, 714-790-9697, or message us or email us info@whatsamortgage. Just say you want to talk to me, right? Say, hey, I have a lender. I'm pretty deep in. I'm not looking to change lenders. I want to talk to Min if that's okay, right? And they'll send that message up to me if that's the case. I try to jump in as much as I can in the messenger. I just can't get to everybody, all right? So if you do want to stay with your lender, that's fine, right? I'm here to make sure I help everyone I can. I try to get to everybody, all right? Chris Soto, I have a second job, a base salary of $300 per week plus bonus. The income has been lower the last year and a half than previous years due to COVID. How will they count it? So if you have if you have your base salary, they will let you use your base. But if you're having bonus, if that bonus, you're still getting it now, they're probably going to average it out, right? If the bonus has decreased more than 20%, they might take the worst year and divide it by 12. But you will still, as long as you're getting bonus again, and it might not be the same or less. If it's less than 20%, guess what? They're going to average it out. If the decline is more than 20%, they're going to take the worst year. If you have that second job, you better have that second job for 2 years, or you can't use that second job. You're going to able to use your base income, your bonus if you still have it. Okay, hopefully that helps you out. Chris, if you have a VOE, I can help you interpret that VOE. If you want to get qualified and have someone pull a VOE for you, reach out to us, right? And we'll help you out. Jolene was good. Quentin was good. Terry, my cousin, refinanced in May of this year. Should he refinance again? He refinanced from 4.2 to 2.75. Terry, leave that alone till next year, right? If I'm right, 2.75, you would have to see 2.375, which there might be a chance, but it would be hard. Leave it alone, Terry. Leave it alone. Unless they're going to do a 15-year fix at 1.99, yes. But right now, rates are gone up. I don't think you can see that around anymore, okay? Do you guide mortgage brokers too? Sonny, I do my best to help everybody. If you are a mortgage broker, I like a lot of mortgage broker, right? I love United Wholesale. They're doing great things for people. Depends on your situation. Sometimes it's good to use a mortgage broker. Sometimes it's good to use a direct lender. Sometimes it's good to use a bank. It all depends on where you fall as a consumer, right? But if you are a broker, you would like advice, Sonny, always reach out. Lowest rate right now, Jack, for conventionals, you'll see either 2.875 if you're lucky, if you have a big enough down payment, right? Or big enough equity, or you're gonna see like 3 1/8, 3 1/4 right now. The threes are here. For how long? I don't know. Sometimes I think it's gonna be here, and then it disappears back into the twos, right? We just don't know. All right. So Alfredo, what's going on? Oh, if you're gonna go with the government loan, you're probably sitting at 2.625, 2.875. Hopefully that helps you out. Alfredo, Adu and Junior Adu, do you need 2 years? ADU. Okay, Adu. Sorry about that, Alfredo. ADU and Junior ADU. Do we need a 2 year to use the income? Yes. You need a 2-year history to use the income on the ADU. Hopefully that helps you out. It's got to be on your tax returns. Can I use my tax return to qualify? Yes, you can use your tax returns as long as you show income on it. Alfredo, to refinance, you need a 2-year history, right? Some lenders might let you get away with 1 year. It all depends. Talk to the lender. Typically 1 year for sure, but I'm sure it's 2 years. Right, Terry, what's going on? This is Charles. What's up, Hannah? Charles from the Bay. Can you use more than one down payment assistance program? You can't merge different ones together. Some cities allow you to merge different grants, but it'd be really hard to do, right? I've seen it before. Typically, a bank will provide it. If you're with one lender with DPA, you can't go to another lender, get another DPA, and merge it all together. But Charles, remember, the more DPAs you have, the higher the payment's going to be. So be careful. Right? But you can merge it. I've seen it done before. Jack was good. You're welcome. Alfredo was good. Chris Soto was good. Guys, I really appreciate everyone who asked questions. Thank you so much. I really appreciate it. It helps the algorithm. Everyone on Facebook and YouTube. How much gross income to buy a $300,000 home? It all depends on what income you have, right? I mean, what debt you have. If you a $300,000 home, the payment's gonna be $1,800, right? That's no debt. $1,800. So take 1,800 times it by 2. I recommend you make at least 36, maybe $4,000 a month if you want to buy a $300,000 home, just to be safe. All right. Hopefully that help you out. What's going on, Aaron, Sonny? You have a lot of knowledge. What is the best way to get in touch for some guidance? Give us a call, 714-790-9697, or you can email us, info@whatsamortgage.com. All right, Sonny? If you want to talk to me directly, just say, hey, I want to talk to Min, okay? They will message me, okay? All right, guys. Thank you guys so much again. Like I said, I appreciate everyone who watches the channel. Like I said, we want to end all our live stream with our attitude is gratitude. Without all of you, there would be none of us. So thank you so much.